Price crashes, regulators in the firing line, and record-breaking inflows on staked ETH, all in a week's work for crypto. So time to break it down then. Welcome to Market Movers. I'm Megha Chaddah. It's been a couple of days now, but the tables really turned around in this one. Coinbase, the second largest crypto exchange in the world, is suing the United States Securities and Exchange Commission. Why? To make the regulator publicly share its answer to a months-old petition filed with them on whether the crypto industry would be regulated under the current SEC framework. Just last month, the SEC issued a Wells notice to Coinbase, but the crypto exchange is in no mood to back down.
Litigation will put the SEC's own actions on trial, erode public trust in the SEC's mission, undermine any incentive for market participants to engage with the SEC, and put at risk broad aspects of the SEC's enforcement program. So we're asking you directly not to waste the SEC's limited and important resources on unnecessary litigation that will only harm the very investors that the SEC is mission-bound to protect. The SEC has other productive options available to it. If the SEC believes that certain digital assets are securities, or certain parts of Coinbase's business should be registered, Coinbase continues to welcome that dialogue. But at a minimum, those assets need to be identified.
On the other hand, Bitcoin bull and venture capitalist Chamath Palihapitiya made dire predictions about the future of digital currencies in the United States.
Crypto's dead in America. I mean, now you had Gensler even blaming the banking crisis on crypto. So the United States authorities have firmly pointed their guns at crypto.
From one case to another in South Korea, prosecutors indicted Terra Labs co-founder Daniel Shin for alleged fraudulent transactions related to the cryptocurrency project run by the firm that collapsed last year. In a press briefing, Seoul Southern District's financial crime team said Shin's part in the financial fraud is greater than that of Terraform chief Do Kwon. But in a statement sent to Forkast, Shin's legal representatives rejected the allegations, saying they are ready to clear up any misunderstandings the prosecution may have. Also, Shin has not been arrested yet. He set up Terraform Labs with Do Kwon, who is currently under arrest in Montenegro for passport forgery charges. Kwon, meanwhile, is wanted in South Korea and the United States, and both countries want to extradite him. On to the crypto markets then, which have had a bit of a rough start to the week. The crypto top 20 charts look like a roller coaster ride as the week went on, but we are ending it on a positive note for most of the major cryptocurrencies. Ethereum lost as much as 11% at the start of the week, giving up most of its gains from the smooth implementation of the Shapella upgrade. And as the Ethereum withdrawal queue gets shorter, the impact of Shapella upgrade is beginning to be felt. Last week saw over $1 billion worth of ETH being deposited for staking, the highest ever on record. And some say this was driven by institutional staking service providers and also people reinvesting their staking rewards after withdrawal. We're certainly ending the week on a high note though.
I don't think it's bearish. I think most people, if anything, will stake more just because it's easier to unstake. My conspiracy theory, so that's just a personal opinion about the price action. I think that when the Shapella upgrade happened, a lot of the large Ethereum whales actually did not sell. They were wanting to keep the price up so that the narrative about that, unstaking capability would indeed be bullish and people would feel optimistic about Ethereum and buy more and think that, everything is going well, in order to then exit some of their holdings on the more general retail, and short-term trader. I think that's what happened. And so there's definitely some selling pressure, but I don't think it's about the unstaking specifically.
On prices though, Ethereum looks flat over the last 24 hours, sitting comfortably around the $1,900 mark, and Bitcoin has gained about 1.5% since yesterday, trading just under that $30,000 mark. The OG of the crypto world is finding it quite tricky to decisively break through that critical level. And just last week, we were talking if 30,000 could be Bitcoin's new support. We are obviously not quite there yet, and it might take a little more than a week-long rally to entertain that idea.
I think prices needed to go much higher for 30K to be psychologically, even for the market, a support line. I think there were good narratives in the crypto space, and there were also trouble in the traditional financial system, which kind of propped up the value proposition of crypto. But clearly that was enough to take us from the sub 20K to the 30K, but not much higher or for much longer.
While we are on the subject of troubles in the TradFi space, another US bank could be at the cusp of failure in coming days. First Republic Bank's earnings report came out earlier this week, which showed that more than $100 billion had been withdrawn from the bank. Its share price fell sharply and the bank's market value has dropped more than 90% so far this year. In the last round of bank failures earlier this year, which saw the collapse of Silicon Valley Bank and acquisition of Credit Suisse by UBS, SEC Chairman Gary Gensler pointed his fingers at crypto, blaming the industry for the collapse, claiming that Signature Bank and Silicon Valley Bank's exposure to crypto was directly linked to their collapses.
The idea that crypto was at fault with the banking crisis, like the traditional bank crisis, is to me absolutely ludicrous. I think it's a very simple case of risk management, which sometimes fails, where you're holding a certain asset and a lot of people want to withdraw and you just can't pay that back. But I don't think it's related to crypto in any way, shape or form.
Over in the world of NFTs, meme coins are making a comeback with Pepe. The token is an Ethereum native ERC20 meme coin based on Pepe the Frog, a cartoon character that became a popular internet meme. Growing demand for Pepe led to higher gas fee on the Ethereum network, which spiked to a one-month high on Wednesday. Pepe announced its first token airdrop on Monday to celebrate reaching 50,000 holders. But the overall NFT markets are experiencing a significant downturn. Let's bring in Forkast Labs data analyst Yehuda Petra to unpack what's driving NFT markets to grind lower. Yehuda, good to see you. NFT prices and volume are taking a hit, leaving many investors scratching their heads. Has the NFT bubble burst? Have we hit rock bottom yet?
I do think the NFT bubble did burst, and I don't think that was a recent thing. I think the bubble really burst at some point last year. The market's been down significantly, especially the past 30 days. And as far as what could cause that, meme coins, trading crypto in general, people are choosing to spend their time and investments over on that side as opposed to NFTs. So when you're looking at the Forkast 500, it's a great representation for the value of those, those blockchains or the market as a whole, but it also reflects traders and what they're doing or not doing. And again, looking at how the market is right now and in general, the Forkast 500 being down, to me, that reflects the volume. There's very low volume happening on the NFT markets right now. Traders just aren't trading.
So how will it play out?
We continued that analysis from last year. So not January 1st to just April 27th, but January 1st to the end of last year, the market was down over 80%. I want to say it was more like 86%. If we continue that cycle this year, a little scary to think about how much lower that really is. It's pretty drastic. And people maybe should be cautious if they're using that index, along with their trading. We could potentially go a lot further. And personally, I think that we could, maybe should. You look at NFTs and what they're priced at. Still, many NFTs are valued in the thousands of dollars. Some of them, the biggest ones, in the tens of thousands still. And it's just hard to picture that they really are worth that. I picture most NFTs being worth hundreds, some thousands for sure, and I think some have earned their value. Something like a CryptoPunk has certainly earned its place at the top and probably will always command 50, 60, 100 ETH. That to me makes sense. It was basically the inspiration for what's happening in the NFT space.
As the hype fades and collectors become more selective, which projects in the NFT space are the most promising?
There's really great stuff happening all around the NFT space, whether it is communities that are still building and growing together and teaching each other and learning from each other. Also the art. The art is world class, and that is an important thing that's happening in the NFT space, where digital artists now can make a living by selling their NFTs, and People are taking notice of that. Sotheby's and Christie's are selling NFT art at this point regularly. They're going for high dollar amounts, and I think that's because it is an important movement and the art is pretty significant. Politics will be something that can drive the masses when you have somebody like Donald Trump releasing NFTs. There's multiple things that will really funnel people into the NFT space, but gaming is a big one. People love games, and whether they like it or hate it, they say they hate microtransactions, but the numbers don't lie, and the numbers tell us people do actually love to spend on microtransactions.
Now, Yehuda, what role will Layer 1 blockchains and Layer 2 networks such as Cardano and Polygon play in the future of NFT sales? How will this impact Ethereum's dominance in the segment?
Layer 1s are important, serving as the backbone for these networks and these communities. But I don't know how scalable they are. We see that even with Ethereum's upgrades over the past year or two that people thought would help the gas fees, lower the gas fees, they really don't. So it is those layer 2s like Polygon that are the solution for those high fees, and that is what will definitely lead to mass adoption.
And how is wash trading affecting the NFT markets?
Feels like wash trading is propping up the NFT space, and it's kind of reflecting poorly on what the space is about. There are great products, there are great NFTs out there, and they're being overshadowed by really just fake transactions, just moving money around or buying and selling just to farm rewards on platforms. We just need to I guess put that up front. We need people to see that, to what degree it's happening, so they can learn how to identify the real thing, how to really value certain NFT projects and not have it muddied by all of the wash trading.
Thank you for the insights as always, Yehuda. We'll have more on wash trading next week. Now, crypto markets slowed down over the last year as we dealt with one crisis after another. But those creating digital systems of tomorrow are holding on strong. We caught up with Deng Shao of Hashkey Capital recently and found out how they are navigating these challenging times.
Most recently, you closed a $500 million fund. That was your third round of fundraising. And the environment that we are in right now, and for the last year that we have been ever since, we saw the Terra Luna implosion and that cascading into many projects collapsing in a way. And I would say now what we've seen with FTX, and it just seems to be, one sort of bad news after the other. It's not the most conducive environment, one might say, for fundraising. How challenging was it to close the fund, and how different was it from your previous experiences?
This is our third fund. For this fund, our goal is to build a bridge to introduce more institutional and professional investors into this emerging industry, this new areas. But our principle is that we hope to invite investors who aim for the longer-term development of the industry, which means they are patient investors, and they have high standards for the investment philosophy, investment practice, portfolio management. All the standards and practice have to be institutional grade. We were lucky and we're very thankful to our investors, who include sovereign funds, corporate investors, family offices, high net worth individuals, even traditional VCs.
When you're looking at the new fund deployment, how much influence is the current market conditions really playing in terms of where you're looking to invest? Which projects would you be looking to back?
This industry is very cyclical. In every 3 or 4 years, you will see a cycle. We try to invest in starting from the very fundamental layers. We see the entire ecosystem into like 4 major areas. Starting from the bottom is the layer 1. That's more like the protocols, chains, and then layer 2, the middle layer. Layer 3 we call the application layer, and also a 4th category we give it a name, crypto finance. Crypto as a new asset has been recognized by more and more institutions and professional investors. At the same time, we'll also look at opportunities in the what we call emerging markets. Now there are major hubs like Asia, the US, but still in Africa, in Latin America, Southeast Asia, we're seeing the growth rates there are very significant, and we are seeing applications bringing real value to the users in many ways, in a financial area, in banking. These applications brings in real financial inclusion for those underserved, underbanked users who may not even have a bank account now, but with the blockchain application, they are able to enjoy the financial services or banking services which they are now being excluded. So that will be one of our focuses.
The events of the last 8 months have led to certain territories and geographies moving really fast and trying to move fast on the regulatory front. With your vantage point right here in Asia, how do you see the regulatory landscape really playing out, and what sort of advantages do you think that being in this beautiful city really offers digital ecosystem developers?
Hong Kong has expressed support to attract more Web3 and blockchain-related entrepreneurs to come to Hong Kong. Singapore has similar strategies or policies to attract and retain Web3 players or entrepreneurs in Singapore. Also, there are other jurisdictions competing for the entire blockchain ecosystem. Our strategy is that if any jurisdiction creates the environment that is beneficial to our business and to our portfolio companies, we would be happy to be there and try to build the local community and do our part. That's why, as you can see, we have business and teams in Hong Kong, in Singapore, in Japan as well.
All right, that's it from us. Like and subscribe to this video for more content like it. Let us know your thoughts on what's happening in the comments below. We'll catch you next time.